Hi guys, Sandy Ingram here. Welcome. In today's video, we are going to discuss exotic currencies and how we as IQD investors and BND investors, how we fit into the global picture. Exotic currencies are currencies that are thinly traded in financial markets. Now, what the hell does thinly traded mean? It means that the big banks, the ones who are basically ruling the Forex market on a daily basis, do not invest or use these exotic currencies for international transactions. The big banks don't really touch the exotic currencies in most cases. The reason that we are talking about exotic currencies is because the Iraqi Dinar and the VND and other currencies that we watch on this channel are considered to be exotic currencies. To start with, banks initiate 80% of all transactions that occur on the Forex market each day. 80%. Now that leaves 20% of the market which we fit into that actually trade daily onto or in the Forex market. Now, when I say we fit into it, we are not day traders. We purchase our Iraqi dinars, or we purchase the currency, we hold the currency until the value increases against the US dollar. So we are investors, we are currency investors, but we are not day traders. There are 10 million Forex traders worldwide. 10 million. And that's the 10 million, that's the group that we fit into. We don't trade pairs, although perhaps maybe we should sooner rather than later, but we do not trade pairs. We buy and hold. The fact that you have invested in the Iraqi dinar, an exotic currency, places you in a unique position globally as an investor, as a trader. You must remember, you now belong to a unique club where there are only 10 million other members. This is saying a lot, guys. I hope you're hearing me on this. No, you're not day trading, but you are participating. You are part of the 20% that trades. Now, in this video, you're going to learn and hear how much power the 20% has. We don't have a lot, but we do have a significant amount of power. And this video is, this report is going to share with you what that power entails. Foreign currency.
Now here's the deal. Retail or individual foreign exchange traders, or the 20%, can sway niche markets, short time frames, or exotic currencies. But our impact on the major currency traders is limited. Let me repeat that. The 20% of individual traders can significantly influence the foreign exchange market when it comes to exotic currencies. Iraq and the Vietnamese dong are just two exotic currencies we explore on this channel. Again, exotic currencies are currencies that are thinly traded in foreign exchange markets and are not widely used in global financial transactions. So what influences individuals when investing in exotic currencies? For intelligent traders, they usually rely on economic and geopolitical conditions, revaluation or reform expectations, talk of IMF reforms, central bank currency redenominations or debt restructuring sparks speculation, oil, gas or resource wealth. Countries rich in resources like Iraq with oil or Zimbabwe with minerals fuel beliefs that the currency must eventually rise. Political stability and international deals, peace agreements, trade pacts, or major infrastructure projects like Iraq's development road create optimism. So, here's a list of the most popular exotic currencies and, well, why people actually buy them. 1. When people talk about exotic currencies, one name always comes up first, the Iraqi dinar. It captures attention because Iraq is sitting on some of the largest oil reserves in the world, and that fuels the belief that one day the dinar could be revalued on the global market. Add in talk of IMF-backed reforms and Iraq's massive development road project, and investors see a currency with long-term potential and, honestly, the chance for dramatic gains. 2. Another currency that excites speculation is the Vietnamese dong. Vietnam has become one of Asia's fastest-growing economies, attracting foreign investment and developing into a major manufacturing hub. Investors buy the dong because they see it as part of a rising growth story in Southeast Asia, and they believe it could eventually appreciate if the government continues reform efforts. 3. The Zimbabwean ZiG, which stands for Zimbabwe Gold, is a more recent entry that's really captured global attention. So, after years of crippling hyperinflation, Zimbabwe introduced the ZiG in 2024. What sets it apart is that it's partly backed by gold reserves. And that gold connection makes many people believe this could be the stable reset the country needs. For investors, it feels like betting on a nation determined to rise from its past economic troubles. 4. The Iranian Rial, well, it's different. It's a speculative play for folks who believe that sanctions might one day be lifted. With Iran's vast oil and gas wealth, there's definitely a sense that reintegration into global trade could spark a major shift in the rial's value. 5. Similarly, the Egyptian pound attracts those who see opportunity in a currency that has faced, repeated devaluations. Egypt's role as a strategic hub, especially with control of the Suez Canal, keeps alive the belief that the pound could rebound strongly with improved stability. 6. In Africa, the Nigerian Naira is another story investors watch closely. Nigeria is the continent's largest economy, powered by oil and a huge population. Frequent government talk about currency reform encourages investors to speculate that one day, the Naira might stage a turnaround. 7. Then there's the Russian Ruble, which isn't usually considered exotic but has become highly speculative since sanctions reshaped its value. For contrarian investors, Russia's energy dominance makes the ruble a risky but potentially rewarding long-term bet. No, most Americans have no interest in the Russian ruble or the Iranian Rial, however. International investors are buying these currencies for long-term profits. What ties all these currencies together is the same mix of hope and speculation. They're fueled by resource wealth, reform stories, and the appeal of buying millions of banknotes for a few $100s. For most investors, exotic currencies are less about hard fundamentals and more about the dream of hitting the jackpot if geopolitics and economics align in their favor. Therefore, our investment in the Iraqi dinar and all other exotic currencies is speculative.